Hello, Finimizers. Welcome to this Finimize Live special event. Please use the chat to introduce yourselves. Let us know where you're tuning in from. Please switch to all attendees so everyone else can see your lovely message and let you know where they're messaging from as well. Cool. And I will kick off with some of the housekeeping while we get started. So like I said, welcome to this Finimize Live special event. My name's Carl. I'm the VP of Content here at Finimize, and I'm the host of today's special session, The Future of Finance, Building Investment Platforms for the Modern Era, presented by Finimize and Finimize for Business. Housekeeping very quickly, please introduce yourself in the chat box. Let us know where you are in the world. Switch to all attendees so we can see, everyone else can see your messages. The format for this session is a 30-minute panel discussion with our esteemed panel who I'll introduce shortly, and then 15 minutes of Q&A from you guys in our audience. On that Q&A, use the Q&A box to ask a question. If you see a question you like, please upvote it so it moves to the top, and when we come onto the Q&A, I'll sort by most popular questions, and that's how we'll go through it. So let's kick this off. Welcome, everyone. For those of you who don't know about Finimize and haven't been introduced before, this event is brought to you by Finimize for Business. It's our content platform that has helped over 300 financial institutions engage modern investors, boost engagement, revenue, and retention with content that converts. Through our network of partners, Finimize content reaches over 40 million individual investors all around the world. Please find out more at finimize.com/business. That being said, I'm delighted to introduce our two expert panelists for our conversation today. First, we have Lule Demmissie. She's the US CEO of eToro, the world's largest social investing network. In her role, she oversees the company's expansion and investments within the US, which includes operational infrastructure, marketing, investment thought leadership, and much, much more. And we also have John Bartleman, the president and CEO of TradeStation, the investment trading and education platform. In his role, he oversees the firm's strategic development, including heading up TradeStation Crypto and You Can Trade Inc. He's held various roles within the company prior to leading it, including in product management, growth, and its brokerage operations. So we've got an expert panel. We also have expert attendees here in the audience today. We've assembled founders, C-level execs, senior leaders from across traditional finance, fintechs, startups, and they're all keen to hear from you, Lule and John. So let's make this session as hands-on and practical as possible. Make sure everyone leaves with a notebook full of insights, take their work to the next level, and to impress their bosses. So yeah, let's get into the conversation. Lule, John, welcome. Thank you so much for being here.
Thank you.
Thank you for having us.
Now let's get into it. So, the event is called The Future of Finance. So let's kick off with the $64,000 question. We're currently in the middle of the greatest wealth transfer in the US. Somewhere between 70 to 80 trillion dollars is set to move from boomers to Gen X and millennials over the next 20 years. In the UK, it's around $6 trillion. And we know that Gen Xers, and to a greater degree, the millennials, have different wants and needs from their forefathers. So how do you see the industry evolving? John, let's start with you. How's the industry evolving, and what do you see, or where do you see the role of TradeStation in this evolving space?
Yeah, it's been interesting, coming out of the beginning of COVID when, everyone was on lockdown and you had the stimulus checks, and we really saw an entire generation of people, basically entering the market for the first time, learning how to invest, self-directed, some active trading. So I think that is an interesting jumping point now as we see the transition happening, where you've got sort of legacy, your parents, grandparents that may have used, wealth advisors, but now you have a younger generation that I think more trusts technology. So what's that transfer going to look like? This is an interesting question, sort of for the advisor space and for firms like ours. So TradeStation itself, we tend to cater to the highly sophisticated, highly active customers. So ours is more of a path for someone who has been doing this for a while and wants to become, more proficient, develop a, real professional trading strategy or an approach, and get access to other asset classes. You may want to graduate to trading, equity options or futures, things like that.
Fantastic. And Lule, I guess eToro dovetails into that quite nicely, given the social element of the platform. So where do you see the industry going and your role within it?
Yeah, I think, the industry is going to have different players in it. I do think the idea that one specific player can answer all of the questions of how do we answer the wealth transfer challenges, especially of millennials and younger, is going to be tough. But so eToro, just for by way of background, plays in the newer to investing, but still self-directed realm. So sort of to the right of or left of TradeStation, if you will, in terms of level of complexity, but still orientation towards self-directed. It's a social platform that has self-directed trading on it. We think that there is a few secular trends that in some ways, I think the fever pitch we saw during COVID kind of became a distraction in the sense that because we then saw a slight, sort of downtick afterwards, we thought, oh, this is the trend, the trend going away. And actually, the secular trend continues to take place. And there's a few things that we think are going to happen. One is the continuous sort of technology using for more dynamic financial planning and advice for people, right? Just like Uber did or Lyft did for taking out the inefficiencies out of the travel and taxi limousine sort of space, and Airbnb did for hotel space, et cetera. There's inefficiency in how to help people manage their wealth in finance. And so I think one trend you're going to see is like whether it's AI, generative AI, or natural language or other things, continue to squeeze out inefficiencies of things that the human doesn't need to do that technology can do. The interesting thing we also see is that even though the human is relying on all of these technologies, even now as that wealth transfer takes place, there's an element of a ambidextrousness that's kicking in, which is that the human also wants to have like a high-speed car. What percentage of their allocation is for high-speed car depends on their lifestyle and their wealth and where they are. So we see the secular trend of an appetite for more risk. Again, high interest rate environment kind of hides that a little bit, but that secular trend continues. You see it even in the way the market started performing. And yes, Bitcoin's going down, but it went up again after it crashed, right? So there's an element of like secular trend around self-directed, self-determination. And then the sort of the trusting of the wisdom of the crowd that I think is going to be a fundamental part of that wealth transfer solutioning.
Okay, fantastic. A lot to dig into, and we all come back to some of those points, I think. You touched on AI. Now we've got to talk about AI. It's hit every industry. Investing is no different. I want to hit you with a stat. So when we surveyed our modern investor community this quarter, only 14% of the respondents said they actually use AI when making investment decisions, which is down from 2 quarters ago at 36% who are using it. So suggests to me that early interest has dropped off because the tools maybe haven't caught up with what investors are looking for just yet. That sounds a little different to what your customers are saying, Lule. Is that right? Or what are you guys seeing?
Not a little different, but a lot different. And this is part of where I'm saying like each player is going to play for different part of the orchestra, right? I really do think that like everything else in social, investing will also have different personas that each player will sort of appeal to. So when you think about our demographic, 55% plus is millennial. The rest is either younger than them or slightly older than them, right? So we already have a demographic bias in the kind of people we survey, right? But after all, this is a conversation about wealth transfer. So it's important for us to see, okay, what are those people who are going to be inheriting that wealth thinking of? Yep. And yes, indeed, our survey tells us, something like 40% of people believe that AI will be a central part of their investing habits right now to in the future. They have different nuances around it, right? So a majority of it is about research and validation, but there's a good chunk of it that's also about trusting it to pick securities for me or trusting it to design my portfolio for me. And I've never been one of those people that looks at something like that and freaks out. I think that the retail investor has been so underestimated in their intelligence. They're no less or no more dumber than an institutional investor, right? An institutional investor is, after all, a human being as well. And as more and more products are made available to the retail investor, the arbitrage between an institutional and a retail investor becomes less and less so, right? And that's what's happening in our world right now. Players like TradeStation and eToro are making accessible tools. In the old days, where like a technical trader on some very sophisticated trading desk would be able to have, right? So I definitely think that there is an openness to AI. I think like every new technology, we should have some caution around it, but I don't want to mute the excitement around it as well, because it'll have transformative impact.
Fantastic. John, can I maybe get you to pick up on that point around democratization of tools, of professional tools, and into retail investors' hand? I guess that's, that's one of the foundational principles of TradeStation. So, tell us from a product point of view, especially, I guess, given your background, how you go about that and how you do that in a safe way.
Well, yeah, and it's really an interesting space here. We start talking about AI and the capabilities. With TradeStation, our heritage, being algorithmic trading, having easy language and strategy backtesting as part of our core DNA. We've been, deep in this technology and providing this kind of access. But the interesting part is now so many cool startups are happening all around the world, leveraging these types of technologies. We can't keep up. So the goal for us is, how do we keep our hands wrapped around this and empower those platforms to become more full featured by providing access to things like our API, so they can have direct market data and execution capabilities. But these are new novel ways to analyze markets and place trades, or invest in portfolios, things like that. So it's been extremely dynamic. Now the challenge though is going to be on the regulatory side. I see we're already starting to see recommended new legislation from the SEC on this type of environment. They're worried about AI. What is this going to do? So we have regulators asking, what are you guys doing? I think we're going to need clarity. And it feels to me the regulators are taking this broad approach and trying to squash it too quickly, where we need to really work with them and figure out a path that's appropriate for retail investors.
Yeah, absolutely. I mean, AI is not going away no matter how you cut it. So the sooner we can all agree on the path forward, the better, I think. So, and maybe let's put this out to both of you. I think starting with you, Lule, I guess eToro's research showed that 34% of retail investors think AI will eventually outperform money managers, which might be worrying for the active managers in our audience. I guess with an eye on the future, because eventually he's probably doing a lot of work in that statement. But how do you think about ensuring eToro captures a share of AI-driven outperformance?
Yeah. So we have 32 million global users. Remember, we're a social platform. So people are consuming research, intelligence, and tracking other people, et cetera, on our platform on a regular basis, 32 million. Of those 32 million, north of 3 million are actual account holders that are actually trading on our platform as well, or, at some point in the year are trading on our platform. So the benefit of the posture we have is that there's a lot of data to understand behavior, and behavior of, again, this class of individuals who will be the inheritors of the wealth, right? Based on our demographic. And I think so, when I think of that 35%, I'm not really a big fan of I think they're valuable to make us pause and think, but I'm not a big fan of thinking in terms of scarcity model. I think every single time a new technology shows up, we're all scared it's going to obliterate us all. The matrix is actually here, and we're all going to be like the batteries that power the machines, right? But then what happens is, if you look at it all the way from farming to farming innovations to internet, et cetera, it ends up having this multiplier effect in which humans end up doing things that are much more higher value to their own lives and to the world, and we leave behind inefficiencies. And why do I say this? Well, the reality is much of portfolio management that's not necessarily fundamental research, for example, can actually be run through algorithmic logic or AI, right? Or generative AI. And so I do think that there will be part of money management where that will be true, that indeed either algo has done that with so many types of robos and other things, right? But generative AI, when it adds in those elements of intelligence, will also be able to do that. That doesn't mean that all forms of money management go away. I think it does mean, though, we should be smart about what parts of money management we put our bets on and what parts that we allow the technology, again, to take out those inefficiencies.
Got you. And then maybe switching to you, John, I guess if alpha becomes harder to come by, then the partnerships you have in the AI space using the tools that TradeStation offers become even more important. Is that the right way to think about it?
I think so. I mean, over time, I think that's going to happen. And like we were just saying, I mean, this is going to augment everyone's capabilities, whether you're an advisor, and you've got to focus on someone's entire life, not just their portfolio and how well that's doing. This will help an advisor and take away some of that responsibility and provide, hopefully they can, overperform. Same with a self-directed investor. They're going to need to leverage any of these tools to give themselves an edge. And that's where we look, how do they take advantage and where can we provide, access for them?
Got you. Maybe one more question, just using some of our data as a jumping off point, and then we'll switch gears a little bit. But before I do that, David and Lucifer have put 2 questions in the Q&A channel. We'll come to those in about 15 minutes. I just want to encourage everyone to log their questions, and if you like what you see from others, upvote them, please. So back to the survey we did with our community just this quarter. 2/3 said they prefer to manage their own investments in future. Just 15% said they wanted to delegate to an advisor. 21% said they prefer to use a digital service. Now, there'll be a mix in the round and in terms of how people do things, but presumably that's a huge opportunity for both of your firms. That comes with a lot of responsibility to make sure investors are being smart with their money, both in the short term and the long term. And I guess all that to say, or to ask, maybe John, starting with you, has the role of education changed over your career? And I guess how do you crack the challenge of putting the information in front of your users, giving them the tools and the skill and the education they need, without giving them the feeling of being in school, at which point they probably switch off?
Yeah, we're seeing, maybe a bifurcation of 2 different kind of age groups. So you've got your younger generation, I think, is more apt to find education on YouTube and social media platforms. They find that that's the way that they want to learn and attract, and then they'll come to a broker dealer, whether it's in eToro or TradeStation, to take more of our, proprietary education, how to leverage our technology and tools, learning maybe some more sophisticated, advanced methodologies for trading, more as a professional. And it's so how do you blend that mix? And you've got sort of your older generation, I think, is much more into the more standard classroom-like approach. So here, where we're still, we may be producing webinars and things that are small bite size and actually leveraging AI to make that more efficient and faster. But we also do things like what we call our masterclass, where we have a 3 to 5 day sessions in person, generally in South Florida at our headquarters, where we bring our top traders in to be able to learn, not just our tools, but more advanced technology. So they prefer that type of a setting.
Got you. And yeah, Lule, I guess similar question to you. And I guess with social dynamic, it makes me feel, using that school analogy, it makes me think a little bit more of a classroom where everybody's going to look to, the kid at the front of the class or the troublemaker at the back. How do you manage that?
Yeah. So first of all, I do agree that there's still going to be room for that classroom masterclass. And I've heard many amazing things about TradeStation's masterclass program. So I think there will always be a desire to gather and learn from high degree experts, right? But I think in between that, because none of us have that time in our life to do that all the time, there's a few things that we do. So one is we designed our platform, the virtual platform, to be exactly the same almost as our actual platform. And the reason is we think one of the forms of education is a learn by doing education. Because if you don't practice the doing through the process of learning, you will never get started. That has been sort of since behavioral science began, as people have learned that, right? So we're applying that logic here as well. So our virtual trading platform, which is like a award-winning trading platform where you can track securities and assets, track other investors, because remember, we're a social investing platform. That's a place for you to be able to also invest virtual dollars to see the sting of a loss and the joy of a win. We recently acquired also an options company where we apply the same logic called draft trading, where you can actually see a draft trade and see the joys and the benefits that come with it. And then also sort of get your toes in the water in terms of actual trading. So that's one, learn by doing through virtual trading platforms. The other is, survey after survey we do with our customers says that social investing is something that they really value and trust. So this disintermediation of classic institutional knowledge, where some, asset managers, strategist tells you which way is north, is valuable, but it's one input. It's not the gospel, right? Yep. And so what they're doing is they're actually getting from the hive mindset thoughts in our social platform, where you can post things where others post other things. And so this sharing of know-how is another element of education that is very indicative of this particular generation. And then lastly, I'd say, they are, and FINRA, at the time, a few years ago, it was a bad thing to say gamification, but I think everybody's realized that there's nothing wrong with fun in education. In fact, without it, nobody's going to learn anything, right? I think everybody agrees with that. If anybody who has children who knows this, right? There is no learning without fun. And so bringing back the art of fun while still being regulatorily responsible, I think is going to be another tool set, whether it's edutainment or fun, that you're adding to the education components. Yes, that sort of expert in a classroom, but now sort of like in between the continuous learning one does during your investment life. And you're right, self-directed investing is a secular trend, as your survey shows. And it's not because people are saying they don't want experts. As I said, they want a piece of the action in terms of driving the car as well, because the information is available to them now. Like the pro charts you have available on the eToro pro charts platform. It's like, I remember when I started out, and I'm not that old, and like active, incredibly sophisticated floor traders were the ones that had access to that. So this element of like access to these tools and these, it's like, in the old days, right? People didn't know how to read, and suddenly everybody starts to learn to read, and then that changes the game. That's what's happened to investing, these democratization of all these tools. Now we have to figure out how to unflood people so that, we are not overly burdening them by the crisis of too much choice.
Gotcha. Okay, I'm going to shift gears. I've got 8 minutes before we're going to open up to the floor. I'm a VP of content at Finimize, so if I didn't ask this, I wouldn't be worth my salt, and everyone in the audience would throw rotten fruit at me. So, John, let's start with you. How do your teams measure the ROI of content? I guess maybe in the marketing space, for instance. Can you share a couple of KPIs for what success looks like and some tactics for how you deliver it?
Sure. Yeah. So it's two parts there. I guess that the pure marketing, so your general advertising, your social content, display content, those types of things. We can measure that now. Really fine tuned from these spot you're pushing that piece of content, the message that's there, the colors of those, and basically the throughput from someone clicking on that ad down to opening an account, funding an account, and getting to first trade. I mean, that's extremely measurable. And one of our key KPIs is time to first trade. So we can actually track all the way through that funnel. The other then is some of this education content, where we may use that as a form of marketing. You're putting content out there for free for someone to be able to consume. How do you measure that ROI? It's a little bit different. Not necessarily directly financial. We tend to look at things like the number of eyeballs on the content, how long they're spending on the content. It's certain pieces of that. We may do customer satisfaction scoring, and then we can also, if they're a customer of ours, we can then measure the effect of that on their long-term life at TradeStation. Does this basically improve their longevity as a trader? They more apt to stay longer, perform better. Those are things we try to measure and want to be able to make sure that we're producing content that's actually helpful.
Fantastic. We've heard from other online brokers that customers up their trade volume by about a third after consuming content, and that those who interact with more than one type of content drive 3 times the revenue of those who engage with just one. I guess, Lule, same question, but I guess first thing, do those numbers sound similar to sort of what you'd use as a benchmark for success in content or your ROI?
Yeah, it affects what kind of content, right? So we find, for example, we create content with context, we get higher pull-through rates, higher trading sort of elements. When we create content that's relevant to the event of the moment, right? Whether it's the Fed speaking or some sort of an economic number coming out, it has a higher degree of content, click through, pull through, trading, etc. So content is not all created equal. Just like I said about like the volume, the crisis of volume, there could also be a crisis of volume in content. So first of all, I think that content is so essential that I think that, just because you can measure or you cannot measure something, it doesn't make it less important. And I think that in the arena of content and marketing, we've just scratched the surface when it comes to being able to make things measurable, right? We have a phenomenal performance marketing arsenal at eToro, whether it's in the US or global. And we have an understanding of what our LTV is, what our CPA is, what is our click-through rate, what is the funded account rate. We have all of those things. But at the end of the day, measuring alone is not going to do it. It's efficacy as well, right? So we also respect the fact that content creates a halo effect that's not necessarily always measurable. So we do things like PR and other content that we measure things like volume, like share of voice, for example, right? Because if you don't have a large volume of reach, then whatever drips down to the bottom is not going to be as effective. And we also know that there's a gap in that, right? So you could have share of voice for a long time and not see as much downstream, but that share of voice is creating brand awareness and other things for you, right? So we measure brand awareness. We have a ton of sort of data points that we measure around brand awareness on a regular basis. So I think that measuring is essential, but it should never be a replacement to our gut knowledge that not everything that is great is measurable right now, unfortunately. And so we don't want to stop doing great things because of that.
Got you. And then John, maybe just to come back to you on those stats as well. So online brokers upping volumes a third and interacting with more than one content piece, 3x the revenue. How does that sound relative to the sorts of numbers you're seeing?
Yeah, I think that aligns with what we're seeing. And the same thing, you're producing a lot of content. It takes oftentimes, prospects at least, a lot of touch points before they finally pull that trigger and say, I want to come in and actually give this product a try. So yeah, I think those are all very important.
Awesome. So that brings me on to the next big topic that I know your peers are probably wrestling with, and that's engagement. With education, with marketing, with content, the whole piece. So maybe to set the scene a little bit, we've done some calculations where we think that a broker with an ARPU, average revenue per user of about $50 can break even on a modest 5-figure investment in content by just turning 1,000 dormant customers active. So just maybe with that as the backdrop, John, if I think about Bitcoin 2022, everyone can see your background there of the laser-eyed Bitcoin bulls. So you brought along this giant blue laser-eyed thing, charging bull, was on display. Can you just maybe tell us, how you came up with that? Well, who came up with that idea? I'm sure you're definitely taking the credit as the CEO, but how did that idea come to be born? And then what did you see on the back of it in terms of engagement, with new users, existing users, across the piece?
No, it's a really interesting story. So this actually was a brainchild from our marketing team and our creative agency. So we as a team had tasked them when the beginning of COVID happened and we sort of had this explosion. And being a South Florida based company for the last 40 years, we started seeing everyone in not just crypto, but the legacy financial space coming into Florida. We're like, whoa, guys, we're the original fintech here. So we kind of wanted to plant a flag here, one, to say like, yes, Miami is the future of finance. We're here. We represent this also as a form of financial inclusion as well, as leading with crypto, that's really been a mission behind this entire movement. So the team came up with a lot of different concepts, and when they presented this idea of a new crypto bull to be an anchor here in Miami, I said, yeah, this is great. Let's do it. So those guys went off, and within a year they created this entire amazing statue that we then basically have presented in Miami, and is sitting there today in downtown Miami as a sort of a beacon and a flag for the future of finance. So it was a really exciting kind of process to do that. We're actually going to be launching a documentary about this entire building of this coming up in October at the Dumbo.
Fantastic.
So that's interesting. But talking about engagement now, this is something we had no idea how to measure. What is this going to do? No clue. Could be a bust. it turned into an unbelievable branding and PR experience for us. I mean, we obviously had the mayor of Miami there, helping push this, and it happened to be at the ultimate peak of crypto kind of frenzy that was going on there. So we got billions of impressions from this, and the brand awareness was tremendous. It's really like Lule was saying, hard to measure, financially what that looks like, but that was pretty significant for us as a brand event, and share a voice during that period of time.
It's fun, John. I actually saw that bull because I was there in Bitcoin Miami. We were doing a panel there, and I saw it, and I was like, "Oh my God, this is so brilliant!" And I'd already imagined, what is that fearless girl, like in front of it already, like a bot side of the fearless girl in front of it. So I think good content also, or good creative, has legs that can turn into like a franchisable sort of life, and the next version and the next version. And I thought that bull was brilliant. And again, one of those where, again, we can't stop doing great things because we don't know how to measure it right out of the gate. But it's really valuable that as a performance marketing shop, we have so many things we can measure.
Fantastic. And maybe I hope everyone will forgive me switching gears one more time before we open up to audience questions. You've both had a huge amount of success and experience in scaling organizations in new markets. So Lule cracking the US with eToro most recently, John cracking Japan back with TradeStation, was bought by Monex, breaking into the crypto market. So another $64,000 question before we open up to the audience. How do you scale into new markets? And maybe just to narrow it down a bit, because conscious of time, what are the crucial do's and don'ts you can share with the other execs on this call? John, maybe starting with you.
Yeah, so I mean, I've been in TradeStation for 24 years, so I've seen the advent back when we were a software company, shipping the software in diskettes to becoming a broker dealer. But what I would advise any, fintech startup, anyone that's got these great ideas, is to take small steps. So the biggest thing for us in the success was not trying to bite off too much. So when we wanted to become a broker, we became an introducing broker first for one asset class, which we did equities, then we layered in options, then futures. Then we learned enough internally as operations, does it make sense for us to go self-clearing, for example? And we made that choice very consciously. We've become experts at this. We feel we can better monetize the product and have more freedom if we became self-clearing. So then you take that next step. We've done the same with each asset, including crypto. Unfortunately, when we launched crypto, there were no real introducing broker relationships, so we had to build a little bit more upfront. But again, taking those small steps, I would say, make sure you've perfected your product, get a group of customers excited and behind what you're doing, and then take that next step.
Fantastic. And Lule?
Yeah, so there's a few things I'd say. The one thing I'm a huge fan of is being honest intellectually with people, to tell them that it's really hard to scale. If you're lucky enough to scale one or two things in your career, that's like amazing, right? So why do I say that? Because at the end of the day, scaling is it's a perfected art over time in one's career. So I think one is take one step at a time. The other is, like Reid Hoffman once said, in order to do something scalable, you first have to do it in a non-scalable way. So one of the things that I learned is, like, you don't go straight to the most expensive technology. You do as little as possible to test it, to put some proof of life into it. And then when you see there is proof of life, then you double down on the more expensive things. I've seen way too many businesses sunk because at the end of the day, there's the passion of the product development and the idea, and they're all navel gazing before they actually went and tested it, right? So making sure that whatever ideation, whatever product stuff you do has the quickest speed to market, the lowest level of effort, to be able to make sure you're testing it is really important. And then ultimately, the other part of it is really harnessing the power of the crowd, right? So for us, it's very valuable that we're a social platform because it has a sort of an amplification element to it, right? But figuring out, how do I amplify in community, in culture, in a way that allows me, that's why performance marketing is so essential for us, right? The way we perfect Google optimization, Yahoo, YouTube optimization, etc. So ultimately, like, first, non-scalable, perfect it to make it scalable. Second, don't navel gaze. Don't create tons of products that are really expensive. And I know my product and tech partners hate it when I say that, because ultimately, guess what that means? There's going to be a lot of tech debt, right? Because when you do that approach, that means you have to factor in the fact that you're going to create like this level of technology junk, right? But you got to create some level of tolerance for that if you're going to seek out many ideas that could be scalable, right?
Yeah.
And then lastly, I'd say, focus is really important. And I know it sounds really simplistic, but I find that a lot of organizations fail so badly on this point, that the appetite is so big, and then they lose the focus, right? There was a focus at the beginning of the business idea, and then there's a focus at the review of the results of the idea, but there wasn't a focus in operationalizing the idea. And so I think that's going to be a really important muscle for a lot of companies that want to become scalable have to do. And then, of course, the usual sort of trope of M&A that I think helps a lot of companies go from step to step.
Yep, fantastic. So I've gone into the audience Q&A by 5 minutes, but definitely worth it to hear your insights on scaling. So we're now into the Q&A. Just as a reminder, if you have got a question, please put it into the Q&A box rather than the chat box in case there's anything in there. And upvote the questions you most want to hear the answers to, and I will ask them to our panelists. So Lucifer has asked, do you see traditional tech firms entering the fintech space? X is speaking about launching its own stock trading platform, I guess, as one example. Anyone want to comment on that?
Yeah, so yes and no. Yes, for those that either X, I think, is a little bit of a unique one because of the fact that it's already where a lot of FinTwit people reside. So it makes sense that they would lean into something like that. But I think in some ways, some of the regulatory heat that we've seen in the last 2 years probably has made some technology companies say, maybe we'll take a seat for this for a while until it settles down. But then there are other technology companies that already had in their DNA some level of fintech, like a PayPal is a good example, right? And what they're doing now with some of the technologies that they're leaning into, new technologies and new blockchain-based technologies they're leaning in. So I think it's going to be two camps. The ones that are completely like new to it or don't have, as I said, that early stage proof of life in their business model at first. I don't know if that's this environment will help them accelerate, because I just think it's a lot of headache. For those who already are in this space and have already done proof of life and they see the value of it, I think there will be more for sure.
Awesome, thank you. John, anything you want to add there?
Yeah, I mean, I would just say yes. I mean, we're seeing what's happening with X and others, and StockTwits, sort of on the back of Twitter back then, launched their own broker dealer, and I don't think that had the uplift they had thought. Same thing is the regulatory pressures of being a broker dealer are a lot more than if you're just a fintech. So it really constrains what you can do, and I think a lot of these fintechs really are taking the path I think makes more sense is to plug into whatever broker they want to, or multi-brokers like a platform like TradingView, where you can have access to dozens of broker dealers, so your customers have choice, but you're not the broker dealer, but yet you can make your platform product look and feel like a true brokerage product.
Fantastic. That's a really good point. David has asked, for this wealth transfer to the self-directed, how are your platforms thinking about educating your customers on more traditional financial planning elements beyond investing and trading?
Well, that one, yeah, go ahead.
So for us, I'd say, part of it will be partnership with others who do it well. Back to my point about focus, we definitely think our focus is harnessing the power of social trading and self-directed products and services at the moment. For sure, our product roadmap will and continue to evolve. But one of the ways that fintechs, I think, do something really well is they have a frenemy model a lot of times, and we plan to lean into that, right? If there are partnerships that make sense for, like, say, there's some, financial planning fintech that does it really well, to be able to partner together, again, to give that best in breed solution. The other will be the natural evolution of our roadmap. But as I said, I think the more fintech decides to be everything, it's like that old adage, you try to do everything and you become nothing. It's really hard to then be best in breed in something. Obviously I'm wrong when you're looking at large scaled businesses like a Schwab, for example, right? But what's so beautiful about the ebb and flow of capitalism is companies become really big, then they go through the bloat, and then new technology and challengers come up through the weeds and challenge them. So I think that ebb and flow will continue.
Yeah, I would agree. Same thing with us. I mean, we're hyper focused on sort of that sophisticated active trader. So, we know, part of the wallet share of our customers may be with advisors, but our customers are sophisticated enough. They know they can self-direct a portion or most of their assets, and it makes sense for them. We're here to help empower them. So it's a little different, but same type of thing.
Absolutely. And I suspect that as people's financial needs, requirements grow more complicated, they will, they will over time seek advisors. But the challenge, I think, for the advisors is to make sure that they have a relevant offering, whether that's through the education on offer, through how they communicate, how they engage, and potentially, I think the forward-thinking firms are probably learning lessons from the likes of you guys already, but there's a huge opportunity in there as well.
Yeah, and if there are people in the audience that are thinking, you know what, we can partner, call me up, because I do think that part of it is like, again, this community-centered conversations we all have is how new innovations are born and new partnerships and means of scale are born. So, but definitely for us, it's the self-directed investor that's social trading.
Lucifer again. So during COVID, many new clients who traditionally bet on sports events had to turn to trading financial markets. How do you retain these clients? Incorporating more gamification within your platforms?
You want to start?
So, oh, wow, that's fascinating. So first of all, I don't know if I agree with the premise of that question, but I would say that I think because eyeballs were in front of their computers, more and more people became open to leaning into the secular trend we already have seen, which is self-directed investing. I don't know if it all had to do with, again, there's a difference between the headline, spicy headline versus what actually has happened. So I'll give you an example. Even as as COVID retreated, we didn't necessarily see people fleeing our platform at rapid rates, right? They may have toned down a little bit some of their trading at some point, and then they come back when there's some big event or some sort of cyclical thing that happens, but they didn't necessarily flee, which is a really, really good story for investing at large and for people at large, because we know that if people don't partake in capital markets, there's no wealth transfer to be had, right? So that's one. I do think, though, the gamification component is a fair one, which is there is nothing wrong with making the activity of investing interesting and fun, as long as you're not making it irresponsible. And I do think we learned some of those skills, both in terms of how we do our UI and how we shape our community during those, we upped our skills during those COVID years, and we've kept those skills in our pocketbook. And then to the extent that there were lessons that, that maybe not how not to do, we factored them into the way we do things.
Got you.
Yeah, and I'd add to that, we saw the meme stock craze, the small retail investor really moving, entire markets. And I think there was something there behind, people not being able to gamble. Sure, they said, I can do this, I can start trading, which can be a form of that. And what I would see is that, some of the smaller, newer clients we brought in over that period, they can tend to overtrade their accounts. So, if you do that too much, you can see then attrition naturally happening, like, oh, this isn't for me, I'm not there. But what we surprisingly saw was, the maturity of some of these more serious traders that wanted to learn moved into futures, actually, which we didn't see this coming, but, CME and the other exchanges really focusing more on the smaller retail trader with the mini and micro products really took off, and they got some adoption in this new group of traders and investors that it was kind of surprising to me, but a positive sign that there is development happening, and I think longevity for some of these traders.
Absolutely. Question here from PA, which I think is an interesting one, considering I'm sat here in London and you guys are in the States. How do the UK and other countries catch up with markets like the US, where investment awareness is so much higher?
Yeah, it's tough because it's not just investor awareness with the US, right? There are several factors that the US has to its benefit. One is the DNA and the founding of the country is about capital markets and participation in capital markets, right? So already culturally, it's like a huge part of the US. Second, it's like more than 50 plus, so closer to 60% of households invest in the marketplace, right? And I believe in the rest of the world, it's like high single digits at best and teens at best, right? So you've got I think the way that a lot of that adoption will happen is, yes, education, but frankly, also culture. I think that if more and more people are talking about investing in their cultural centers, it becomes more natural to be putting it as part of your vernacular. So how do we do that as an institution if you're abroad? making your education and your content something that's nice to share over cocktails, right? Making sure that it's shareable, so that your consumers and customers know how to make it part of the tapestry of their conversation. That's in the US, it is. It's, you go to any Thanksgiving dinner and it's going to be sports and investing that are the two topics. People avoid politics now, right? So it's sports and investing, right, that they're talking about. And so I think that it's an amorphous theme to tell anybody, but it is actually very valid. Like, how do you make the content and the work that you do shareable at cocktail parties?
Yeah, no, I'd agree. And I double down on that. The U.S. has the best capital markets environment in the world. I mean, I think the rest of the world is really maturing as far as their interest in connectivity into the U.S. markets. And there is developing in obviously other regions of the world, but we're seeing about 20 to 30% of new customers coming from international markets. So there is large demand to invest in the U.S. markets and these products here. So I think the international space is really developing, and definitely a growth area for firms like us.
Fantastic. Let me maybe squeeze in one more question. We'll spend 20 seconds answering it, and then we'll wrap up, because I think it ties in quite neatly to your last comments there. Which types of financial services firms can benefit the most from incorporating content into their propositions to drive more engagement? Now, a cynic would say the question is, who's not getting talked about at the cocktail dinners, who should be, but I'm sure you're both much more optimistic in terms of interpreting that question. So John, shall I start with you?
Yeah, well, if I think I missed the beginning part of the question, but if it is like, I think all products should be focused on engagement and content to some degree, and pushing that out to the markets.
Fantastic. And Lule?
I think that it is the oxygen of anything to do with growing and amplifying and scaling. Without content, you are invisible. Even if you're farther away, like even if you're a deep B2B, like an IBM, for example, right, who might be a B2B, but your consumer is like 3 legs out, you producing intellectual content and thought leadership helps you, because guess who's making the decision on your B2B? Another human being that has heard stories and thought leadership about you. So I think that content is oxygen to anything that wants to grow.
Content is oxygen to anything that wants to grow. That's a beautiful line to end on. I'm afraid that's all we have time for today. We had plenty of questions there from more audience that we couldn't get to. I still had more I'd thought through. John, Lule, thank you so much for joining us today. I hope you've had as much fun as I have, and to our audience, I hope this has been as enlightening and informative for you guys as it has for me. Thank you guys for sharing your insights.
Thank you.
Thank you.
To our audience, please fill out the feedback form that will pop up on your screen when this ends. Hope you all loved today's event. To see further details of some of the stats that I mentioned in the discussion, please visit finimize.com/business, download the Q3 Modern Investor Pulse, and of course, get in touch with any of the Finimize team for questions. And see you all at the next Future of Finance event on September 20th. Details will be in your inbox later today. John, Lule, thanks again.
Thank you.
Thank you.